Are we live now? Good evening, good evening, good evening, guys. I, CA Pratik Neve, welcome all of you on behalf of MEPL. Just confirm, are we live so that we can start with the session? Just checking. Yes, guys, welcome. I welcome all of you to this batch of indirect taxes, of this batch of tax for the final level. Yes, am I properly audible and visible to all of you? Shall we start? Yes, guys, warm welcome to all of you. Yes. So, guys, how are you all doing? Just let me know in the chat window. Just waiting for all to join. Just waiting for all to join so that we can start with the session on GST. I can take you to the world of GST. And yes, good afternoon. Good afternoon, Santoshi. Yes. Chalo, guys. So, how are you all? Chalo. Yes. So, GST, goods and services tax. Goods and services tax is very, very critical in your exams. And of course, practically also, you can see that you cannot avoid goods and services tax. On each and every transaction, on each and every transaction, there is going to be goods and services tax. GST, it is an indirect tax. It is an indirect tax. Yes. Hello, Nitin ji, Nitish ji. Hello. Yes. So, goods and services tax. So, when we talk about this goods and services tax, as you all know, that this is an indirect tax. This is an indirect tax. Okay, this is an indirect tax and it is a destination based, consumption based indirect tax. Yes. On intrastate supply, that is supply within the state, there is CGST plus SGST, and supply outside the state, that is on interstate supply, there is IGST. Yes. So basically in the GST, the important body of GST law, as you know, is CGST Act. Important body of law, as you know, is CGST Act. Correct. In this CGST Act, the heart and soul, I would say, heart and soul of any indirect tax, okay, or for that matter, GST, heart and soul is input tax credit. Yes or no? Heart and soul is input tax credit. So today we are going to learn about this input tax credit in a very, very simple way, and we are going to go in depth of input tax credit. So are you ready to learn input tax credit? Let me know. Input tax credit, ITC. You must have done this at the, yes, your second level, executive level, intermediate level. You must have done it. But now we have to dig really deep into this input tax credit. So by just telling you very, very basics, okay, one very general chain of GST I will explain you, and via that we will go in depth of input tax credit. Okay. So see, guys, do you know what is a typical chain in GST? What is the typical chain in any indirect tax? If I want to know any indirect tax, I should understand this typical chain. What is this typical chain? This typical chain is from the manufacturer, the goods reach to the consumer, isn't it? So this is a tax, as you know, on consumption. This is a tax, as you know, it is based on destination. Yes, it is based on destination of consumption. So this A sells goods to B B sells goods to C, C sells goods to D, isn't it? C sells goods to D. So finally goods reach this D. From A, the goods reach to the D. Who is this A? This A is manufacturer. And who is this D? This D is end consumer, or you can say he is end customer. Agreed? Now, very interesting point of any indirect tax is that its burden, the burden of this entire indirect tax is always on end customer. So end customer is going to always have burden of GST. But in levy and collection, it is given that it's charge. Charge means who will be liable to pay this GST to the government? It is this supplier, this A, this B, and this C. This A, B, and C, they are called as suppliers. Yes, A, B, and C are called as suppliers. So suppliers will pay GST to the government, but burden will be on end customer. Did you get the point? Let me know in the chat window that did you understand this point. To government, who will pay the GST? The suppliers. To government, the suppliers will pay the GST, but final burden of GST will be on whom? The burden of GST will be on end customer. Is this point clear to all of you? Yes, no? Let me know, guys, in the chat window. Yes. So collection of GST will be done from suppliers, but its entire burden will be on end consumer. Agreed? Yes. So how exactly this happens? So there is a manufacturer, this B is suppose wholesaler, this C is retailer, this C is retailer. Agreed? Now, what do you think is common between A, B, and C? Can you tell me what is common between A, B, and C? Common point between A, B, and C is all of them are suppliers. Yes, all of them are suppliers. Number one. Number two, all of them we are assuming are registered. All of them are registered under GST. Agreed? They all are registered under GST. They are suppliers. Now what happens? Let's understand with help of one simple illustration. Okay. A sells to B goods for 10,000 rupees. It could be any goods. Its selling price is 10,000. Okay. That means it has cost plus profit. Government says we want our GST on this. Okay. Say GST is at 18%. So government wants GST of 1800 on this. That is 11,800 will be selling price. Do you agree with me? 11,800 will be selling price. Sir, why are we discussing this? We are discussing this for two reasons. First of all, to understand how this whole GST model works. And second, to understand what is the role of input tax credit. Okay, so slowly I'm going to take you into that. As you can see, the topic of discussion is input tax credit. Yes. So it is 11,800, the selling price including GST. Now guys, for wholesaler, what is the purchase cost? For wholesaler, the purchase cost excluding GST. Can we say it is 10,000 excluding GST plus his own profits and costs? Say he wants to have it at 5,000 rupees. So guys, his selling price excluding GST will be 15,000. It will be 15,000. Calculate GST on this at 18%. Do the calculation. on 15,000 at 18%. It is 2,700. Now selling price will be 17,700. Do you agree with me? It is 17,700. Now guys, for retailer, what is the purchase cost? For retailer, the purchase cost excluding GST is 15,000. Yes. You will say, sir, why is no one taking in their cost GST? Why is no one taking cost? Why is no one taking GST in the cost? Why is no one taking GST in the cost? Yes, you will understand that logic, and that's exactly where the input tax credit comes into picture. Okay, so purchase cost by B is also taken without GST. Purchase cost by C is also taken without GST. Yes. Now what happens? Suppose profit and cost and profit, cost plus profit that C wants to earn is say 2,500. So 17,500 is selling price. On 17,500, GST will be at 18%, amounting to 3,150, 3,150. So what will be the selling price finally including GST? Is it 20,650? Check and tell me whether you are getting 20,650. Now guys, what is 20,650? 20,650 is MRP. It is MRP including all taxes. Yes or no? It is MRP including all taxes for this end customer. Do you all agree with me that for D, the end customer, MRP including all taxes is 20,650? Yes. So when this person pays 20,650, then you know he's paying 17,500 towards goods and is paying 3,150 towards tax. Agreed? He's paying 17,500 towards goods and 3,150 towards tax. But if D keeps his accounts, means if D keeps the record of his expense, tell me guys, how much will D record as his expense? Will D say that my price of goods is 17,500 and GST on that is 3,150? Does it matter to D how much is the price and how much are the goods? Does it matter to D how much is the price and how much are goods? For end consumer, my dear friends, it is immaterial what is the GST amount and what is the price of goods. So 20,650 is the final cost, for the end consumer. Yes or no? 20,650 is final cost for the end consumer. Do you agree with me? If we are all on same page, if you agree with me that 20,650 is final cost for the end consumer, then I can show you how much GST government has collected from whom in this case. So can we go ahead and discuss that? How much GST is collected from which supplier in this case? Yes or no? Yes guys, let's go ahead. Now we have to talk about two things here. Output tax. Yes, there is an output tax, which is tax collected on doing the sale. From that you subtract input tax credit and you will get net GST payable. Now see the fun. see the fun. A collected from B, A collected from B 1800 rupees. A had not paid anything on purchases. So net A will pay to government 1800 rupees. A will pay net 1800 rupees to the government. Did you all get the point? Now talking about B, B has collected from C, B has collected from C 2700. But how much did B paid at earlier stage? How much did B pay at earlier stage to A? B paid to A GST of 1800 rupees. So 1800 rupees is input tax credit for B. Did you understand? 1800 rupees is input tax credit for B. So 900 will be net GST payable. Yes, guys, did you get the point? 900 rupees will be net GST payable. So you will say why? So why is input tax credit allowed? What exactly is input tax credit? Okay, so input tax credit is nothing but GST which is paid at the earlier stage. At the earlier stage means on B's purchases, what is the GST paid by B? Yes, so it is 1800 rupees. So of that 1800, a input tax credit is given. Okay, we are going to dig much more deep into this. This is just the beginning, I would say. Okay, this is just the beginning. Now guys, now for C what happens? C has collected 3150 from D, but C had paid to B tax of 2700. So that he will get as credit, and he will pay to government 450 rupees. Now guys, now how much is total GST paid to the government? Yes, 1800 is paid by A, B has paid 900, C has paid 450. Guys, take the total and tell me what is total GST paid to the government. What is total GST paid to the government? 1800 plus 900 plus 450. Total GST paid to government is 3150. Do you agree? Total GST paid to government is 3150. And the GST which was a burden on end consumer was also 3150. Did you understand? So passing the parcel was played by A, B, C. A passed the GST liability to B, B passed it to C, and finally, my dear friends, C passed it to D. Did you get the point? And D is the end consumer, so D cannot pass it to anyone because GST is destination based, consumption based tax. So D is the end consumer, so D needs to have this burden of 3150. Tell me guys, is the point clear to you? How the burden is passed on to the end consumer? At least till this point, is it clear to all of you? How A passes the burden to B, B passes to C, and C passes to D. Yes or no? Quickly let me know so that we can go ahead and discuss technically what happened in this case. Waiting for your reply in the chat window. Waiting guys. Waiting for your reply in the chat window. Okay, I hope it's clear till this point. Yes. Is it clear? Okay, okay. Now, sir, what is output tax? Technically, what is output tax? And what is input tax credit? So, output tax is tax collected on your sales or outward supply. Tax collected on outward supply. Agreed. And what is input tax credit? Input tax credit is tax payable on inward supply. What is input tax credit? It is your tax payable on inward supply. On inward supply of goods or services. Agreed. Which goods or services? Such goods or services which are used in the business. Which are used in business. Is it clear to all of you till this point? Yes. So I understood what is output tax. I understood what is input tax credit. Okay. Now guys, now see, sir, why for B we are taking cost of purchase only as 10,000 in spite of B paying to A 11,800? Why are we taking cost only at 10,000? And in spite of C paying to B 17,700, why are we taking cost only at 15,000? So why is always cost taken excluding GST? Can this be technically proved? Yes, 100%. If we check books of accounts of, yes, B. If we check books of accounts of B, okay, keep B in picture. Keep your B in picture. If we check books of accounts of B, then what will be the accounting entry passed by B on purchases from A? When he purchases from A, his cost of purchase will be only taken at only taken at 10,000. So see, it will be like this: purchases account debit, input tax credit account debit to A's account. Agreed? Purchases account debit, input tax credit account debit. So basically this 1800 of ITC becomes the asset. 1800 of ITC becomes asset. Did you get the point? Yes, this 1800 of ITC is the asset, and this 10,000 is the purchase cost. This 10,000 is your purchase cost. Yes or no, guys? Once please reply in the chat window so that I understand that we all are on same page. Yes, who all is attending? Let me know. Let me know. Nitish, are you there? Keshav ji, are you there? And Santosh. Let me once know whether we all are on the same page. Did you understand till this point? Okay. Yes, no, guys? Is it clear till this point? Okay, okay. Let's go ahead. So similar entries, of course, C will also pass in books of accounts. So this way, I have proved to you that there is an asset of 1,800 getting generated. So this ITC is your asset. This ITC is your asset. This 10,000 is your cost. Okay. Of course, you use this asset for what? So this asset, this ITC is to be availed. This ITC is to be availed. So I need to understand the concept of availment of ITC. This ITC has to be availed. And after availing, what will you do? After availing, you utilize the ITC. After availing, you utilize the ITC. Why do you use the ITC? You use the ITC to pay output tax. You use the ITC to pay output tax. Is it clear to all of you? First you avail, then you use. That's the sequence. Avail, utilize. So what's the difference between availment and utilization? Okay. If I give you check of 1 lakh rupees, if I give you check of 1 lakh rupees and tell you that go and do shopping, can you take check of that 1 lakh to the mall and do shopping? Or will you have to first deposit in the bank? Yes. What type of question this is, you will ask. So obviously, to tell you the to tell you the concept of ITC, I am giving you this analogy of the check. So what do? You first deposit that check and you avail that balance, isn't it? After that, you take your debit card or you withdraw the cash and go for the shopping, isn't it? So first you avail, then you utilize. That's the sequence. So you have to first claim. Claim means you have to put a claim that this is my input tax credit. And after claiming that input tax credit, you have to use the input tax credit. Did you understand difference between availment and utilization, or claiming and utilizing? Did you get difference between claiming ITC and utilizing ITC? Yes. So you know that this particular whole system of GST, that passing on the burden to end consumer, is possible only and only because of ITC. Yes, it is possible only and only because of ITC. So don't you think ITC is a big benefit for the suppliers, for the registered persons? ITC is a big benefit for registered persons. Of course, yes, it is a big benefit for registered persons. So now, will that benefit be given by government as it is, or you will have to satisfy some conditions to claim this benefit? Of course, you will have to satisfy the conditions. Yes, you will have to satisfy the conditions to claim this ITC, isn't it? So that exactly is discussed in section 16 of CGST Act. Section 16 of CGST Act 2017. What it talks about? It talks about eligibility and conditions for claiming or availing what? Input tax credit. Did you understand? Or did you understand at what section 16 would be talking about? It would be talking about eligibility criteria, who can avail ITC, that eligibility, and conditions for claiming ITC. Is it clear to all of you? What section 16 would be talking about? Eligibility and conditions for claiming input tax credit. And guys, if you get any doubt in between, if you want clarification of particular thing, you're always welcome to ask in the chat window. Absolutely no problem. I'll be more than happy to answer your doubt. We are going right from basics. So yes, surely ask your doubt. If it is such a doubt which is going to be resolved in the coming part of the session, I will tell you accordingly. Don't worry about that. Okay. So who will be eligible to claim this ITC? Who can avail this ITC? Any guess that who will be eligible to claim ITC? Who is eligible for claiming ITC? Any guess? Who will be eligible for claiming ITC? So yes, the common point was registered person. Who is eligible for claiming ITC? Any registered person. Any registered person. Okay, for what? On inward supply. On what? On inward supply means purchases. Inward supply of what? On inward supply of goods. Not only goods or services or both together. Okay, inward supply of goods or services or both. Correct? Registered person on inward supply of goods or services or both which are used or intended to be used or intended to be used where? In course or furtherance of business. In course or furtherance of business. Is it clear to all of you? Yes. Yes. So basically, registered person. Oops. Basically, yes. Registered person. Registered, of course, under GST. On inward supply of goods or services or both which are used or intended to be used in the course or furtherance of business. And this ITC, do you know, gets credited to e-credit ledger. This ITC gets credited to e-credit ledger. This ITC gets credited to e-credit ledger. Now what is this e-credit ledger? This e-credit ledger is nothing but your account of ITC with government. Okay, so in government, with government, if your balance is credit balance, it's very good. That means it is your asset. See, when you have a positive balance with bank, when you deposit money in bank, your account gets credited, isn't it? So credit balance with bank means if you update passbook with the bank and if you have a credit balance, that is a good sign, isn't it? For you, it's a good sign. That is your balance with bank, isn't it? So similarly, e-credit ledger, if amount gets credited in e-credit ledger, that means it's your asset. Getting it? So ITC gets credited to e-credit ledger. Is it clear? ITC gets credited to e-credit ledger. Yes. But guys, what are the conditions for claiming this ITC? There should be some conditions, isn't it? So shall we check at the conditions to claim ITC? Yes, let's check the conditions now for claiming ITC. Two brand new conditions are added to claim ITC. So we'll discuss now what are the conditions for claiming ITC. So as you know, our main thrust in the class, main focus in the class is on maintaining a wonderful notebook. So by end of the batch, you will have like a notebook which if you revise, okay, it will hardly take any time because you would have done that notebook along with me after understanding of each and every concept. So like revising that notebook will hardly take any time, and it will be very simple to apply these practical concepts, and no wonder marks and score in the exam will follow. Okay, so subsection 2. So right now we were discussing was subsection 1, that is who is eligible for claiming ITC. Now subsection 2. So why do we do subsection wise? See friends, anyways we are going to do all the things in depth, then why not do them section wise, subsection wise? Okay, so that we don't miss out on anything, and you understand absolutely everything section wise, subsection wise. Yes. So subsection 2 says conditions. It talks about conditions. So it actually says that no registered person will be eligible to claim ITC unless A, he is in possession of, he should be in possession of, he means the person who wants to claim ITC, that registered person. So he is in possession of, tax invoice. Tax invoice, for that matter, debit note or any other tax paying document. Tax invoice, debit note or any other document. Is it clear to all of you? Or any other document. Now, let me tell you, in our ABCD chain, you just focus on A and B. In our chain, A is manufacturer and B is wholesaler. A is manufacturer and B is wholesaler. Now you know that A is selling goods to B for 10,000 plus 1800 GST. So 11,800. Yes or no? So guys, for A, there is an output tax of 1800, and that itself for B is input tax credit of 1800. Yes. Now B wants to claim ITC of this 1800. So what is the condition that government is putting up? That is B should be in possession of tax invoice. B should be in possession of tax invoice given by A on this supply. Is it clear to you? B should be in possession of tax invoice given by A. Yes. Then the next condition. What is the next condition? It's brand new condition a newly inserted condition. Okay, please understand. Before I go to that condition, one very basic I will like to tell you, that since it is output tax for A, since it is a outward supply for A is required to furnish something called as GSTR1. What is GSTR1? It is a statement of outward supply. Outward supply means what? Sales. Sales or provision of services. Whatever is supplied, that needs to be mentioned in a statement called as GSTR1. So GSTR1 is a statement of outward supply. So now, when A files this GSTR1 to the government, then on that basis government will make B's statement of input tax. Government will make B's statement of input tax. That will be in form GSTR 2A. That will be in form GSTR 2A. So GSTR 2A is auto-generated. It is auto-generated. So in GSTR 2A, there should be a credit of 1800 rupees appearing. Correct? And that will appear on basis of GSTR 1 filed by supplier. Agreed? Now this is the second condition to be satisfied. This exactly is your second condition to be satisfied, that the ITC should appear in GSTR 2A of the registered person on basis of GSTR 1 filed by supplier. Okay. So for one it is output tax. That's why for other it becomes input tax. Did you get the point? So this is, they have inserted as condition or clause AA. So this is your second condition. Shall we put up the second condition? ITC in respect of any supply, what I always believe is every student should have in writing all important provisions of the law. Of course, not as it is, but in a simplified form. So exactly that's what we are doing. So if anyone asks you what are the conditions for claiming ITC, you should know all the 6 conditions. Yes. So ITC in respect of any supply of goods or services to a registered person can be availed only if details of invoice in respect of supply has been furnished. Who will furnish outward supplies details or invoices details? Has been furnished by supplier. So I will by supplier in GSTR 1. By supplier in GSTR 1 and such details have been communicated and such details have been communicated such details have been communicated to recipient of supply in GSTR 2B. Did you understand this point? Let me know. Very technical point, but very critical point, and really uh, a lot needed point. I would say this was a very much needed point. Otherwise, anyone will take ITC, so that should not happen. There should be a proper system. Only if that ITC appears in the GSTR 2B of recipient of supply, then can he claim the ITC. Okay. Next condition. Next condition is that the goods or services should be actually received by the recipient of supply, means by the registered person. I have placed the order of the goods. I have placed the order of goods worth 1 lakh. That's it. And I received the invoice. But yet, I have not got the order. I have not received the goods physically. Can ITC be claimed? No. The condition is that the goods or services should be actually received. Should be actually received. Should be actually received. Is it clear to you? Yes. The goods or services should be actually received. Physically, they should be received. You will say, sir, how can we track? How can the officer track that goods are actually received? Friends, for the movement of goods, there are various documents including e-way bill, goods inward note. So yes, of course, with the help of these documents, it will be tracked whether the goods are actually received or not. Okay, only on actual receipt of goods can you claim the ITC. So goods or services should be actually received. Okay. But there's a wonderful explanation to this. Okay. Now what do you mean by explanation? Who is giving this explanation? So mind you, the Act itself is giving this explanation. CGST Act, Section 16, subsection 2, clause B itself talks about one explanation. Okay. So I will call this next diagram as bill to ship model. What I will call it as? I will call this next diagram as bill to ship model. Okay. Once write in the chat window, what will I call it? We will call it as, yes, bill to ship model. Okay. Let's take one very simple example. There is one person A. A sells goods to B. B sells goods to C. Okay. A sells goods to B. B sells goods to C. Now, understand. A sells goods to B, for 10,000. 1,800 is ITC, GST. 11,800 is, the invoice value. B sells to C for 15,000. 2,700 is your GST, and 17,700 is the invoice value. Whole point is this is a chain, typical chain. Okay. Whole point is A is in Karnataka, C is also in Karnataka, but B is in West Bengal. B is in West Bengal. Now tell me, A is in Karnataka, B is in, yes, B is in West Bengal, and C is in Karnataka. C is also in Karnataka, like A. Now tell me what is logical. What is logical? A sending goods to B, then B sending goods to C. Is it logical? Is it logical that A will send goods to B and then B will send goods to C? Tell me, is it logical? It is totally illogical, isn't it? Transport cost will be increased. So what does B do? B will give instruction to A. What instruction? What instruction will B give to A? That directly send the goods, directly send the goods to C. Getting it? So A will transport the goods to C. Yes, A will transport the goods to C. So this will be called as, so do you agree that shipping is done to C? Guys, yes or no? Tell me now, you should tell me. Did you understand that A is shipping to C? I compulsorily want this answer from you. Guys, only in yes or no form. Yes or no. But that much I am expecting from you. Simple expectation. That did you understand meaning of ship to? Okay, and billing is done to B. So bill to and ship to. Yes, bill to and ship to. Billing is to B and shipping is to C. But guys, now tell me, B has to claim ITC, isn't it? B has to claim ITC. Yes or no? Yes, sir. B has to claim ITC. But B has not received goods. Who has received the goods? C has received the goods, isn't it? Now, in this case, when C receives the goods, it is deemed that B has received the goods. Got it? It is deemed that B has received the goods when C receives the goods, and accordingly, this condition that goods or services should be actually received gets satisfied for B. Is it clear? B has instructed A. B has instructed A to send goods to C. Okay. Monica, you have doubt in this? Should I explain this again to you? Here, registered person is deemed to receive the goods. is deemed to receive the goods. Is deemed to receive the goods. Okay, listen carefully. A will invoice on whom? A will do billing to whom? Who is the customer of A? Who is the customer of A? B is the customer of A. So A will do billing to B. So ideally, now B should take ITC. But geographically, it is not possible to send goods to B and again get the goods back to Karnataka, because B's customer C is in Karnataka, but B is in West Bengal. It makes no sense. It literally makes no sense to first send the goods to B and then B again sending the goods back to C in Karnataka. That's why B instructed A to send goods directly to C on his behalf. On his behalf means on B's behalf. So now when C receives the goods, it is deemed that B has received the goods. Now is it clear? Now is it clear to you? Is the explanation part clear to you of yes, condition B, clause B? Okay. Waiting for your reply. Okay. Fine. Again, I will try to explain you. A is selling goods to B. A is selling goods to B. B is in West Bengal. And B is selling goods to C. C is in Karnataka. A is also in Karnataka. So B instructs A that please send goods on my behalf to C directly. So A sends the goods to whom? A sends goods to whom? To C. On whose behalf? On behalf of B. So actually A is not selling goods to C. A is selling goods to B. But A is sending goods to C. So now when C receives the goods, see, B will never receive the goods in lifetime. These goods B will never receive, because B has instructed A to send goods to C on behalf of B. Understood? So now when C receives the goods, it is deemed that B has received the goods. Got it? Now did you get it? Yes or no? Okay. Then guys, there is clause BA, which is also newly inserted. There is clause BA, totally newly inserted. Then there is clause C, and then there is clause D. So in total, how many conditions? In total, earlier there were 4 conditions. Now there are 6 conditions, and very logical condition. First one was invoice should be actually received means he should be in possession of invoice. Second was that the ITC should be reflected in that form GSTR 2A. Third, yes, third was he should have actually received the goods or services or both. Now comes the fourth condition. Yes, I hope Monica, the explanation is clear to you now of clause B. If not, then you can ask me exactly, yes, where you are getting the doubt. Good. Now you are saying understood. Wonderful. Wonderful. Clause BA now. Clause BA. Clause BA is a mere formality. It is a mere formality. ITC in respect of any supply of goods or services or both is available to registered person only if details of ITC only if details of ITC in respect of said supply in respect of said supply communicated to such registered person communicated to such registered person has not been restricted. So actually just a formality that ITC in no way should have been restricted. As we go ahead, you will understand this point in much more depth. Okay, the ITC should not have been restricted. Then, so four conditions done. Fifth is, see, going back, if I look at this transaction, tell me in this transaction, A has sold goods to B, B wants to claim ITC of 1800. Obviously, unless and until given, it is a forward charge mechanism. So, who is paying GST to government? Tell me, who is paying GST to government? Means, who goes to government and pays GST in this case? In this transaction, who goes to government and pays GST? A or B? Of course, for this transaction, A pays GST of 1800 to government. Yes or no? So guys, C condition says the tax on the supply, should be actually paid to the government. Unless and until tax on the supply is paid to the government is not ready to give ITC to C. ITC to that whatever. Who is that person? B. Government is not ready to give ITC to B. So in short, what is the condition? Tax on the supply. Should be actually paid to the government. should be actually paid to the government. Obviously, no? If it is going to be my asset of 1800, then someone, see, I paid 11,800 to A. Out of that 1,800, A should pay to government. Then only government is ready to give me ITC of that 1800. Agreed? Did you get the point? That tax on supply should be actually paid to the government. I am not talking about payment done by B to E, B to A. I am talking about payment by A is done to the government. Okay. So tax on the supply should be actually paid to the government. And last condition, my dear friends, sixth condition. You will say sixth condition, still only clause D. There was a clause AA and there was a clause BA. That's why only till D clause we have. But conditions covered are six conditions. So what is last condition? What is last condition? Last condition is that return under GST must have been furnished. Return under GST must have been furnished. So of course, this is the condition for that registered person who wants to claim ITC. So return under GST must have been furnished. So when these six conditions are satisfied, I am ready to claim input tax credit. Did you all understand all the six conditions? Except to some extent BA condition, because that you will go as we go ahead, you will understand it in much more depth. Yes or no, guys? Are all the six conditions to claim ITC clear to all of you? Along with the explanation. Yes. Any doubt in any of the condition or in the concept of ITC or in the logic of ITC as to why ITC is claimed? Where will ITC go? In which account? In which account will ITC go? ITC, when I claim, will be deposited in which account? So ITC will be deposited in E credit ledger. Yes or no? It will be credited in E credit ledger. Yes. So I hope all the points are clear to you. Okay, shall we go ahead and discuss some provisos? What do you mean by word proviso? What is the meaning of the word proviso? Tell me. Yes, what is the meaning of the word proviso? Proviso means an exception, isn't it? So first proviso is very interesting. What that first proviso says, it says that if goods are received in lots or installments, means what? I ordered for say 1 lakh units. Okay, I ordered for 1 lakh units today. Today's date is, yes, today's date is 20th March. I ordered 1 lakh units today. Immediately on 25th March, they dispatched 20,000 units. Okay, but at time of dispatch of 20,000 units, they gave me invoice for all 1 lakh units. They gave me invoice for all 1 lakh units on 25th March itself. Got it? Now the point is, Can I claim ITC of full 1 lakh units? Or can I claim ITC of 20,000 units? Point is nothing. No ITC I can claim. Because he has given me invoice of 1 lakh units. But goods dispatched are only 20,000 units. I cannot even claim ITC on 20,000 units on proportionate basis. Not possible. Suppose next consignment or next lot was sent on 2nd April of 40,000 units. So now till now I have received 20 plus 40, 60,000 units. And last lot of 40,000 was say sent in the month of May. Then ITC on all 1 lakh units I can claim directly only in the month of May. Is it clear? So what is the proviso? Proviso is don't claim your ITC. Don't claim your ITC on proportionate basis. When you are getting when you are getting inputs in lots or in installments against an invoice, then claim ITC only on receipt of last lot or last installment. Is the point clear to all of you? So, where inputs are received in lots or in installments, then ITC can be claimed, or you will say against an invoice. That's important point. Against an invoice. Okay. Then ITC can be claimed. Then ITC can be claimed only on receipt of. Then ITC can be claimed only on receipt of last lot or installment. Is it clear to all of you? So tomorrow, first thing we will do is start with second proviso, and then third proviso. Okay. So there are 3 provisos in total for this section 16 subsection 2. Okay. It doesn't mean today's session is over. We have precious 15 minutes left, isn't it? We have precious 15 minutes left. Tell me what we'll do in 15 minutes now. Any guess? What we will do in the 15 minutes? So never ever waste any time in the session. Immediately jump onto some practice question, jump onto some question and solve it. So I hope the additional questions are visible to you. In the additional questions, you can go to second question on page 20. So every topic we solve adequate questions and rather extensive questions to cover a numerical on each and every provision. Okay. So are you there to the second question? Shall we discuss it? Yes, we will discuss the second question. Let's see. Second question. From the following information, determine amount of ITC admissible to ABC Limited in respect of various inputs purchased during the month of September 2020. Okay. And importantly, all figures above relate to CGST and SGST. Means none of the figure is figure of purchase. It is directly ready-made figure of GST given to you. Agreed? It is ready-made figure of GST given to you. Tell me on what you can claim ITC, on what you cannot claim ITC. First point, goods purchased. Now guys, I could accept that you did not participate in this discussion, but now at least in solutions you should participate. Tell me, can you claim ITC on goods purchased without invoice? Yes or no? So even if you participate in this discussion, I will say that you have successfully understood the things. Because whatever we discussed today, these questions, two questions which we are going to discuss, are summary of that. So tell me, goods purchased without invoice, can you claim ITC? So, no ITC. Then, goods purchased from PQR Limited. Goods purchased from PQR Limited, full payment is made by ABC to PQR against such supply. But problem is that tax has not been deposited by PQR Limited. Supplier has not deposited tax to the government. So can ITC be claimed? No ITC. Because what was the third condition? Third condition was that in order to claim ITC, tax on the supply must be deposited to the government. Yes. So no ITC. Purchase of goods not to be used for business purpose. So again, point is not to be used for business purpose. You know that in order to claim ITC, the goods or services should be used in course or furtherance of business. Yes, but here it's not used. Don't take ITC. Next, purchase of goods from TT Limited. Okay, invoice of TT Limited is received in month of September 2020. Invoice is received, no problem. We are discussing for September. In September, invoice is received, no problem. But problem is about goods were received in October 2020. Can you claim ITC in September 2020? No ITC in September 2020. No ITC in September 2020. Okay. Because the goods or service should be actually received. Wonderful. Wonderful. And lastly, goods purchased against valid invoice from FF Limited. Very good. So invoice is there. Tax has been deposited by FF Limited. Means supplier has deposited the tax. And ABC Limited has made payment to FF Limited. Now when ROS means recipient of supply makes payment to supplier is immaterial. It is immaterial. That is not an issue. So yes, of this finally 36,000 ITC can be claimed. Do you agree with me that of this 36,000 ITC can be claimed? Yes. Of course, with assumption that other conditions are satisfied. Other condition means goods are actually received. Yes, it's already given he has the invoice, so that's not a problem. Goods are actually received. Entry of this, or you can say the communication of this is done in GSTR 2A. Okay. And then it's already given that tax has been deposited. So that's also not a problem. And a valid GST return has been furnished by ABC Limited. These conditions should be satisfied. Okay, you'll assume that they are satisfied. And finally, you can claim ITC of 36,000. Is it, guys, clear to all of you? So tomorrow we will do presentation of this. Do we do presentation of relevant questions, solutions in the class? 100% yes. We do presentation of relevant solution in the class. Okay, at least one question in notebook in depth in writing of every provision. Okay. And guys, one last question for the day, then we can stop. Third question. Okay. S Limited, registered manufacturer of Jaipur, entered in a contract with supplier for supply of input X in October 2020. As per contract, it was agreed that 10,000 kgs of inputs X will be supplied for 7,28,000, inclusive of CGST, SGST at 6% each, in 4 lots. Invoice of 7,28,000 has been issued with supply of first lot of input X. Following further information has been okay. So Santosh ji, you have doubt in third question or second question? Yes, you have doubt in which question? Second or third? Please let me know. You have doubt in second question or third question? Okay. Let me know that. I am waiting. You are talking about which question? Just let me know so that I can clarify that and we can go ahead. I am reading the chat window. Let me know. Okay. So Santoshji, I'll wait for your reply. Till that time, I will, complete this question. So in 4 lots, invoice of, okay. In second question, he has some doubt. In second question, okay. In second question, what doubt exactly you have? Okay, so if you have doubt in this D point, what I'm saying is you cannot claim ITC for month of September. Can you claim ITC in October? Yes, you can claim ITC in October. In second question, we are talking about, yes, in second question, we are talking about ITC for month of September. In second question, we are talking about ITC for month of September. So in September, you will not get any ITC of D point. That is what I am telling you. Of course, as you go ahead in October, you can claim ITC of D point. So I hope I have solved your doubt. I have clarified the point. Okay, now coming back to third question, very straightforward question. You are going to get inputs in 4 lots. Tell me, guys, and there is a single invoice issued for 10,000 kgs and the goods are received like this. They are saying that invoice has been issued with supply of first lot itself. Okay, and the inputs are received like this: first lot, second lot, third lot, fourth lot. First lot on 19th October, second on 21st October, third on 12th December, third on 12th November, fourth on 4th December. When can you claim ITC? You can claim ITC. Yes, you can claim ITC only on receipt of last lot of installment. That is on 1st December. Agreed? Did you get a point? Entire ITC you can claim only on 1st December. Can you take any ITC on proportionate basis? You cannot take any ITC on any proportionate basis. Agreed? You can directly take entire ITC of, calculate the figure. How much is the ITC? 728 is equal to 112. Why 112? 6% each. So 100 plus 6 plus 6. 7,28,000 includes. Yes, 7,28,000 includes that 12 GST also. So GST is how much? So you know GST will be 728 into 12 by 112. How much you are getting? Are you getting 78,000 rupees? Yes. So this 78,000 ITC can be claimed on 1st December 2020. It is according to proviso to section 16 subsection 2. Okay. So I hope guys you have understood all the things. Do keep this channel subscribed. Do keep MEPL CS exclusive channel subscribed. 2 more sessions on this channel for the for the December 23 exams. Okay. Obviously other subjects are going on. Do watch them also. Okay. And yes, we will discuss that. Question 2 part E. Many of you have doubt. So of course I will discuss that with you. Then we will quickly in 2 minutes revise what we did today and then conclude today's session. Yes. I'm happy that you asked doubts. That means you are attentive, and that also means that other points you have understood nicely. See, goods purchased, I am repeating this point. Goods purchased against valid invoice. So there is no problem. There is a valid invoice from FF Limited. Tax has been deposited by FF Limited. So tax has also been deposited by by supplier. And the recipient of supply also has a valid invoice. Yes. ABC Limited, this doesn't matter. That's what I told you. When supplier makes payment to recipient of supply, doesn't matter for claiming ITC. All 6 conditions satisfied to claim ITC? Yes. So ITC can be claimed. This point, which point? This point doesn't matter. That we, that is ABC Limited, who want to claim ITC, we have paid to our supplier in next month. This point doesn't matter. Got it? Was there any condition that recipient of supply should make payment to supplier immediately? There was no such condition. See, if you are getting confused with the condition that tax on the supply should be actually paid, then what did I tell you? What did I tell you? Tax on the supply should be actually paid. Tax on supply should be actually paid. Actually paid to whom? It should be actually paid to the government. Got it? In our transaction, in our transaction where FF Limited is selling goods to ABC Limited, when FF Limited is selling goods to ABC Limited, who is liable to pay to government? Yes, who is liable to pay to government? GST on this is 36,000. Who will pay the GST to the government? This FF Limited will pay to the government, isn't it? It is the supplier. And there is always, unless and until given, there is always a forward charge. So has supplier paid to government? Yes. It is given that FF Limited, tax has been deposited by FF Limited. Got it? Now Santosh ji and Ashwini ji, any doubt? Let me know. Now, do you have any doubt? Or any other doubt for that matter? Please let me know. Yes, no? So today guys, we discussed basics of input tax credit. Okay, we have seen the typical chain. That typical chain helped you to connect with GST. GST is of course an indirect tax where burden is on end consumer. But a typical chain is always there when the goods reach to end consumer. That chain starts from A, that is a manufacturer who sells goods to wholesaler, who sells goods to retailer, retailer sells to end consumer. Isn't it? So there could be a bigger chain also. This is a very typical small chain which we have discussed. So we have seen how none of them have burden, nor A, nor B, nor C. None of them have burden of GST. Whole burden is passed on to the end consumer, that is D. How it was possible for government to collect tax at each stage we have seen. Tax is collected from A also, from B also, from C also. Collection is from A, B and C. But burden is on D. Agreed? Yes. So this passing of credit becomes possible. This passing of burden of GST becomes possible because of provisions of input tax credit. So input tax credit means a tax which is paid on purchase at the earlier stage. Means when B purchases from A, that tax which B is paying to A. When C purchases from B, that tax which C is paying to B. So that can be claimed as input tax credit, which gets credited to E credit ledger. And that E credit ledger, or that balance in E credit ledger, is utilized to pay output tax. Okay, so first we avail, then we utilized. Today, under section 16, we have seen conditions for claiming ITC. Conditions were given in clause B. Okay, so I hope you have understood all 6 conditions of clause B and even the first proviso which we have done. So guys, that's it from my side. Do consider sharing this video with your friends. Yes, and of course I am quite sure you have liked the video and you have subscribed to the channel already, and we are going to do tax in so much depth that it will be a mere formality to clear the exams. Okay, rather we don't want to just clear in tax, we want to get exemption plus marks, much beyond exemption. I would say our target is beyond 70, and let that marks be the outcome of what we are doing in the class and what thought process of GST and what practicality of GST we are learning, and of course your other tax laws we are learning. Let the marks be just outcome of that, and that has been happening in our batches from past so many years, and that legacy will continue with you also. I'm quite sure. At MEPL, we believe in quality education at affordable prices. Do avail that. Thank you. I'll see you tomorrow at 2 o'clock for next session of IDT, where we will dig much deeper in this concept of input tax credit. That's it. Signing off. Bye bye.